Good morning. Welcome everyone that's joining us today. I'm Taryn Dorr. I am the Director of Economic Development here for Bowman County. This is actually our 9th business broadcast. We took a break for a while, but with recent programs rolling out, we wanted to get out there and give you guys some information. We've been doing these calls as a local resource to provide valuable information to our business community. It has been a challenging time. I know you guys all know that. And we want to work to get you the resources you need to help you succeed. The business community continues to move through the different phases of COVID-19, and there is still so much for us to process. Especially when the most recent stimulus bill passed, the Economic Aid Act. We encourage you to reach out to us or any of the other resources available to help you navigate these programs, regulations, or your general business needs. We are always available to answer questions. Just a quick disclaimer to cover our butts. We want to make sure that you know we are trying to provide the most accurate information, but things are changing very fast. So much of what we're about to present is good information, but we know there's still some unknowns out there. So we also want you to know that each individual business is unique. And if you have additional questions, reach out to your lender, your attorney, your accountant, or another trusted resource to verify the information specific to your business. The purpose of today's call is in regards to the reopening of the Paycheck Protection Program. Please note again that the information presented today is subject to change, as we all saw over the last year. We will continue to do business broadcasts on an as-needed basis when relevant information comes out, but just watch for those emails and we will make sure to let you know when we have another one in the future. If you do have a question, send it through the Zoom chat to the Ask Us a Question, or you can send us a direct email at businesshelp@bowmannd.com. We will make sure to answer any questions at the end of today's presentation, and if you email us, we will get back to you right away with the information. You can find a recording of today's call and all other past business broadcasts on our Growing Bowman County Facebook page and on our YouTube channel, Bowman County. So today's agenda, I did a quick welcome. Duane Bowman, and actually we've got a special guest with us, Tanner Fisher, as backup to help with any information. They're going to run through the slides today and let you know what you need to know as a business. At the end, we'll take questions and then we'll do a quick closing. So that is our agenda today. And then just a quick special thank you. We got this information from the SBA. So we just want to let you know, we didn't draft all this information and come up with it from scratch. We did take the information from some other presentations that we've been a part of. I'm going to kick it off to Duane, and then Tanner, you can fill in as needed. So thank you guys for being here today.
You're welcome. Yes, good morning. Well, we'll talk a little bit about the second round of the Paycheck Protection Act, the PPP. And if you haven't heard of that, you've probably been living under a rock for the last few months because it's definitely been in the news and been talked about a lot. The most recent stimulus package that was just passed here a couple weeks ago was the Economic Aid Act. And there was about $280 billion approximately that went into the next part of the PPP program. That's also the package that handed out the $600 individual stimulus checks, the CFAP money, and a number of other areas where that stimulus money went to. The first two rounds, there was about $525 billion. Not all of that money ended up being used. And like I said, this is about $280 billion that went into this part. It's probably not going to go as fast. I think the last time there was a lot of concern about how quick that money was going to run out. I don't anticipate this time that it's going to run out as fast. So there doesn't need to be quite as much of a panic out there. We'll talk about the deadline, but right now the way the new PPP funding is set up, there's two parts to it. There's the First Draw PPP, and that's for any applicant that has not applied previously for a PPP loan. The rules, regulations are very similar to the way they were the first time. And the second round is the Second Draw PPP, and that's for the borrowers that have previously had a first PPP loan. They need to be in good standing with SBA. They need to use those funds. We'll go through that a little bit more in detail a little bit further into the presentation. The new forms, the new application, everything is posted to the SBA website. That's sba.gov. So if you do want to take a look at any of that, that's the place to go for the resources. The SBA approval timelines have been extended. So when your lender will submit the application, it is going to take a few days before to be approved compared to last time where it was approved basically instantaneously. And the other big change is the idle advances are no longer deducted. So if you have had a previous PPP loan and applied for forgiveness and had an idle advance loan, the idle advance is emergency impact disaster loan. And if you did have an advance on that, that was deducted from the amount that was forgiven. Since then, part of the change in the Economic Aid Act has been those advances will be forgiven. So it ends up being a grant, a full grant on your idle advance and also a full grant on your PPP loan. So if you did apply, you don't need to do anything about that. Your lender, it is going to be taken care of, sounds like automatically. And for anybody that hasn't applied or still has an idle advance out there and does apply for a new PPP loan, that won't be deducted from your forgiveness amount. Okay. The First Draw PPP. So as like I said, this goes back to the same rules, the same qualifications as the original PPP loans. The application date for both the First Draw and the Second Draw is March 31st, so a little over 2 months. Maximum loan amount is the same as before, $10 million, and the loan amount calculations 2.5 times your average monthly payroll. So that average monthly payroll can be calculated based on 2019 or 2020. Both of those work, or the last 12 months would qualify as well. The big change that we've seen, and definitely affects a lot of people in this area, is there is change to the farmer rancher, the way they calculate the amount that they're eligible for. In the first round, it worked to where you basically had to show a positive Schedule F. So if you're just a sole proprietorship, a one-man operation, and you had a negative Schedule F, which a lot of farmers and ranchers do, they have depreciation, a lot of times heavy depreciation in there. So there is not necessarily a profit shown. Now they've changed that to where the calculation comes down to line item number 9, which is your gross revenue on the farm and ranch. And it's capped at 100,000. That's basically what they've kind of, SBA has determined is the amount of each individual is eligible for, is 100,000 cap. So if your gross revenue is over 100,000, which a lot of farmers and ranchers will be, then you take that number, drop it down to 100,000, divide it by 12 times 2.5, and you'll qualify for $20,833 is what it comes out to. And even if you are under 100,000, you still qualify as well. So that's a nice change, because before that, when you look at if a farmer rancher has a negative Schedule F, they didn't qualify. Well, really, if they have a negative, it shows that they've had a not very great year and should qualify. So that is one good change I think that's been made.
And that only pertains to the Schedule F and not your Schedule C, which is unfortunate, but that's how they determined that needed to be made anyways.
Yes. Yep. Good point. Schedule C is going to be more on your sole proprietor businesses, but that still goes from the bottom line. So you need to show a positive net income to qualify. Wages and all that are still separate. So if you do own, if you're a farmer rancher that does have hired help and you pay them a wage, or if you are a business owner that has wages, that's calculated different. This is only on basically a sole proprietorship, a self-employed type operation. And the last bullet, some increases may be allowed but are rare. So where that comes into play is if you did apply previously, say you had a positive Schedule F of say $48,000. So you take that divided by 12, 4,000 times 2.5. So you're eligible for approximately a $10,000 loan. You will be able to increase that loan up to the $20,833. But there is one catch on that at this point. If your loan has been forgiven by SBA, so if you've worked with your lender and been proactive and had your loan forgiven, you aren't eligible at this time. That's one thing we do think will change, or really hoping will change, because it seems very unfair to penalize the businesses or the individuals that applied quickly for forgiveness. But at this point, that's the way it works. So if you are in that case, I would just hang on a little while and wait and see if SBA makes changes. Right now, we're seeing changes made nearly every day. So the information we're going to present today, as the disclaimer said, is as accurate as of today, but it could change tomorrow and it definitely could change down the road. So who is eligible for the First Draw PPP? Traditional qualifications, borrowers, they need to certify that their business is negatively impacted by the COVID-19 pandemic. So there's a statement in there that reads, currently economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. That's the one item that you do have to certify. And I know that's a very vague statement, and I'm not gonna tell anybody whether they do or don't qualify based on that statement. That's something that we have to look at. And obviously right now, these are very uncertain times. And that's the one thing I guess that we really can't argue. They are very uncertain. And unless you're Amazon or Zoom, you probably have been negatively impacted to a certain extent. They probably haven't. Borrowers that are eligible need to have 500 or fewer employees. So in this area, almost everybody should qualify. And those are so for businesses, and that can be S Corp, C Corps, LLCs, any type of business entity. And then also borrowers may be sole proprietors, independent contractors, 501c3s, which are nonprofits, or self-employed individuals. And the other condition is borrowers must have been in operation on February 15th, 2020. So the terms of the loan are the same as they were on the previous ones. A 1% fixed interest rate for 5 years, 5-year maturity, and they are 100% guaranteed by SBA. There's no fees, no personal guarantees or collateral. And then the covered period, and you choose this now on the new ones, anywhere from an 8 to a 24-week period. So originally when the first round of PPP loans that came out, it was 8 weeks. They did increase that shortly afterwards up to 24 weeks. So now they let you basically choose your covered period. The loan payments are deferred for 10 months after the covered period. So after your covered period ends that you choose, then there's 10 months of deferment before either payment start or before a forgiveness decision. And at this point, most likely, and there's no guarantee obviously with this, but most likely if you use your proceeds the way they're supposed to be and can maintain your employees and your payroll, basically wages the way they were before you took the loan, then you should be able to receive 100% forgiveness. So the expenses that are eligible, the first round of PPP, these were all the same as far as payroll costs, rent or mortgage interest, utilities, and then other debt. Interest basically on those other debts was also eligible. They did add some additional expenses that are now eligible. Operation expenditures, which is very vague. So if you've got questions on that, see your lender. Property damage costs. This is kind of an interesting one. I think this had to do a lot with the rioting that took place in a lot of areas. So there are businesses that were damaged. Luckily, I don't think we had too much of that in this area. And then worker protection expenditures. So honestly, what we've seen is a majority of the businesses when you're able to choose, so your loan is for 2.5 times your monthly payroll. When you're able to choose up to 8 weeks to 24 weeks of coverage, just your payroll alone is usually enough to satisfy the conditions. So will the PPP loan be forgiven? The loan will be fully forgiven if the funds are used for the intended purposes. So just like we talked about before, those purposes that were mentioned, employee and compensation levels are maintained. So that's basically your number of employees, and then the compensation levels that you're not dropping their wages. And actually they can go down some, but there is a condition, I believe it's 20%, 5% that they can't be dropped. The loan proceeds are spent on payroll costs and other eligible expenditures. And at least 60% of the proceeds are spent on payroll costs. So that's the one area, at least that's something that you have to meet. At least 60% of the proceeds have to be spent on payroll. And the first time when they started, it was 75%. That was one of the other changes, and that rolled over into this as well, the 60%. Okay, so now that's going to talk, that was all about the first draw. So for anybody that did receive the first draw, now they could possibly be eligible for a second draw PPP. So the maximum loan amount is a little smaller on this one. It's $2 million. The loan amount calculations are exactly the same, 2.5 times the average monthly payroll, and using either the 12-month period prior to when the loan is made, calendar year 2019 or calendar year 2020. Okay. The one change, and we'll talk more about this as well, but you're there. Some businesses are eligible for 3.5 times their average monthly payroll. And that's the NAICS codes beginning with 72. We'll go through those, what those actually businesses are a little further down the road. So the one thing you do need to complete is the application. Yeah, this isn't we don't need to worry about the borrower application, but we do need to worry about the borrower application that they need to complete. The lenders have to do one as well. But the application is on the website, the SBA.gov website, or talk to your lenders. They can get that application out to you. It's a pretty simple application. Basically, there's about 1 page of information that needs to be put on there. And then, like I said, I think there's about 5 pages to it, but the rest of it's more certifications and such. So how do you become eligible for those ones? Okay, first of all, you had to obviously have had the first round of PPP, and you had to have used that for the intended use. So that money has to already be spent before your second draw PPP loan can be dispersed. And most likely if you did receive that, that's been closed for quite a while. So your expenditures have been used on payroll. You probably used that the way you were supposed to. So that one's pretty easy to meet. You need to employ less than 300 employees on this one instead of the 500. So this one is a little bit smaller. It's meant for a little more smaller businesses. And then the one big condition, and we'll talk a little bit more about this as well, but you have to experience at least a 25% reduction in revenue. And there is specifics of how that needs to be calculated. So we'll talk about that. So the NAICS, the 72, the businesses, it's basically the hospitality and the food industry. So on this slide, the ones that are most likely going to be affected the most locally, it's going to be your bars, your restaurants, and your hotels. So if you are one of those businesses mentioned in the list here, contact your lender and you could be eligible for 3.5 times your average monthly payroll. So in order to meet that revenue reduction requirement, like I said, you need to experience at least a 25% reduction in your revenue, but that is not annually, it's from quarter to quarter. So if you obviously did have a 25% drop in revenue annually, at least a 25% drop, certainly your quarters were you're going to have at least one quarter that was down more than 25%. So in order to calculate that, you're going to need to provide documentation, provide records that either your first quarter, your second quarter, third or fourth quarter dropped in 2020 compared to the same quarter in 2019. So if say, COVID started in approximately about March, April of 2020. So if your revenue dropped off significantly in the second quarter of 2020, you're going to want to go back and look and compare second quarter 2020 to second quarter 2019. And if you did experience at least a 25% drop in gross revenue, then you would be eligible. So as far as that documentation, you're going to want to possibly meet with your accountant if you feel more comfortable doing that way. If you use QuickBooks, if you're a business that has QuickBooks, you can provide that information, run a report directly off of that to verify it, but you are going to need to get that verification to your lender. So the terms of the second draw PPP loan, they're the same as the first. 1% interest rate, 5-year maturity, 100% guaranteed by SBA. Covered period is the exact same, 8 to 24 weeks. And then loan payments are deferred 10 months after either the covered period or forgiveness decision. And will they be forgiven? Basically comes down to that same thing. As long as you use that proceeds for the same purposes, 60% at least spent on payroll or towards utilities, all the expenditures that were listed that are eligible, then yes, it should meet the qualifications and be forgiven. So the one thing about this, the PPP loans with a principal amount of under 150,000. So if you calculate what your average monthly payroll is, take it times that 2.5, and you come up with less than 150,000, you don't have to provide the documentation of revenue reduction at the time of application, but you do at the time of forgiveness. We've talked about this, and I guess our institution, I don't know how other lending institutions are going to work, but we're going to require it at the time of application. It's just going to be simpler. If you're going to have to provide it anyway, so we're going to ask that you provide it at the time of application so that can be verified that you did have a 25% drop in revenue. The funds need to be used, as we talked about, for the eligible purposes, minimum of 60% on payroll. Your employee and compensation levels need to be maintained. Any remaining balance after forgiveness maintains 100% guarantee. Okay, yeah, that's more affects the lenders. So the next steps for businesses, if you do think you're eligible, gather your documentation, complete your reports, find out if you did see that 25% drop. And that's what I basically, when I've talked to some businesses, that's the first step. Start with calculating and see if you had that 25% drop. If you did, then you can work with your lender, complete the application and get it processed.
Just to go back, if you guys do have questions, please send them to the Ask Us a Question spot on the link. But I actually have a couple questions that have come in, or could you quickly repeat the farmer rancher just because yes, would you mind just repeating that?
Yeah, so you're gonna go after Schedule F, and it can either be your 2019 or your 2020 Schedule F. Some farmers and ranchers probably haven't completed their 2020 Schedule F yet, but I think the deadline for farmers and ranchers is maybe like February 15th. Yeah, so it's coming up here very shortly. So a lot of them probably even have completed their 2020. But if you have not applied, so this is for the First Draw PPP loan. If you're a sole proprietor, so you own your own farm and ranch, you will be eligible based on the gross revenue of your operation, not the net revenue. The first time around, they looked at the bottom line, and if you had a negative net revenue, you weren't eligible. So now this time, as long as your gross revenue, your gross revenue capped at $100,000. Okay, so if your gross revenue is $40,000, you're eligible there. But if your gross revenue was $1.2 million, they're going to prorate that down to $100,000. You're going to divide that by 12 times 2.5, and you're going to be eligible for a $20,833,000 PPP loan.
Okay, perfect. I just wanted to note quickly, as far as qualifying agencies, I believe 501c6s were added this time around. So that's going to include some of your nonprofit type organizations that were unable to qualify this last time around. So that will be really helpful for those of you that were not able to qualify this last time. Another question, does forgiveness have to be finalized before taking the second draw?
No, forgiveness doesn't have to be done yet. You just have to basically show that you've used the proceeds for the intended purposes.
Okay.
That has to be verified.
So their first round does not have to be forgiven.
Correct.
For them to come at the second round.
Nope.
Gross receipts, and just to reiterate that, what does that entail? So just pulling your QuickBooks report, showing your revenue quarter over quarter. Anything else you'd give them?
Yeah, and that's where you're going to want to talk to your accountant or, talk to your lender as far as what is going to be eligible. We've had this conversation a few times at the bank, with farmers and ranchers, if they did take the first draw, and they do qualify as well for the second draw, where they need to show, 1 quarter where your revenue dropped off by 25%. But basically your revenue is going to go across in your tax return. So it's the same as the gross revenue that's going to qualify and run through your tax return. So with a farmer and rancher, we talked about if they sell cows, they're considered cull cows, and they actually don't flow through to your Schedule F. They're considered a capital sale. So things like that wouldn't qualify. But almost all other revenue from an operation would. So it's going to be a majority. If you did receive a PPP loan the first time, that revenue would not go through. But other type of government payments, if you're a commercial business, sales, cost of goods sold doesn't. That is taken out. But it's going to be your gross revenue.
And are you as a lender certifying that that's correct? Or whose responsibility is it to say this is correct? I certify that this is accurate.
Good question. It is actually the borrower that makes that certification. So the lenders are supposed to make kind of a good faith, look at the application, but it is the borrower that makes that certification.
Okay. On the NAICS code 72, just reiterating who those all are locally. I know you mentioned hotels, bars, restaurants. That also includes caterers. That's another industry that could apply around here. Is there anybody else that we specifically around here that you can think of? I think Park and Rec is on that, correct? Not Park and Rec, but campgrounds. And then is there a special provision for like newspapers, media outlets?
Yeah, they were added to the list of businesses that are eligible this time.
Okay, so that's just another type of business that can
Right.
qualify in this round. Does the loan received by a farmer rancher with no employees meet the 60% use for payroll requirement for forgiveness?
Okay, yeah, another good question. When you're a self-employed individual, such as a farmer and rancher, you obviously aren't writing yourself a check. You don't pay yourself payroll. So there is nothing that you have to do. It's considered basically your income, the income that you make on the farm and ranch is almost considered like your wage, even though, like I said, you don't write yourself a check. So you don't have to provide any documentation of that, but yes, you still are eligible. It's considered basically like your draw.
Yep.
You take out
Ownership compensation is.
There you go.
what I use. Yep.
Yep.
And then just looking through my questions, applications can be found on sba.gov. I'm guessing that's where you want people to go first, is get an application and try to weed through it, or call the lender first or their accountant first.
Yeah.
What do you recommend?
If you're the first draw, I'd probably talk to your lender. What do you think, Tanner? Is probably where we'd start. The application, like I said, it isn't very difficult, and for the most part, if you're a business that has payroll, you're gonna have to provide your payroll records. If you're a farmer rancher that doesn't have payroll, you're just gonna be supplying your Schedule C or your Schedule F. Commercial businesses will supply their Schedule C. If you're the second draw, that probably the place I would recommend starting would be calculating your 25% drop in revenue. Do that before you do your application. First, you're going to want to find out if you're eligible.
Okay.
And if you're not comfortable or don't have the resources to calculate that, that's where you're going to probably want to talk to your accountant and see if they can help you do the calculations.
Okay. When are applications due by?
March 31st.
March 31st. And you don't believe that it's going to be as much of a rush to get it? You want to make that prediction?
That's what the SBA is projecting, actually. They're saying they don't expect all the funds to run out by March 31st. So they really don't see the need out there to be rushing your lenders to find out the program.
Okay. Okay. Well, that's good news for you guys.
Yes.
Hopefully. Does just one quarter at a 25% loss qualify for second draw?
Just one quarter.
Just one quarter.
Yep.
Okay, perfect. I don't see any other questions. Please, if you do have questions, email us at businesshelp@bowmannd.com. Contact your accountant, your lender. Any of these people will be able to help you. I know our office is willing and equipped to help anybody that was negatively impacted due to COVID or any other reason. So please reach out to us. We can walk you through some possible programs, marketing ideas, or help you consider other options. So please don't hesitate to reach out to us as a business if you do want help. Other than that, thank you guys so much for being here today. We really appreciate it. We know this is a busy time for you guys beyond PPP. So we appreciate you taking time out of your schedule to be here. So with that, we will let you know if we have any other scheduled business broadcasts come up. Thank you for joining us today.